We're talking about another quarterly profit. Also, free cash flow in the middle of a pandemic. How strong were the results?
I mean, it's incredible what they accomplished. I mean, I'm here in California, too. We have an enormous amount of coronavirus impact. And to run a factory, and the factory was shut for over 4 weeks, but to be able to run the factory in this environment is incredibly challenging. But not only to beat your numbers, but to be profitable in this environment, being shut down for a month just shows that the underlying strength of Tesla's business is enormous right now, and their execution has been phenomenal under the leadership of Elon Musk.
Ross, let me turn a little bit to the factories themselves, because Tesla's Shanghai production seems to have assumed the role of growth engine and really overshadowing the fact that you're not really seeing that much growth in the U.S. market, which is pretty mature. Is it a little bit problematic that perhaps they're relying on these lower prices, perhaps even subsidies in China, and how sustainable can that demand be?
No, I don't see that at all. I see China is the biggest EV market in the world, and China has an environmental problem. So they need to have EVs be successful, and they're very much supporting Tesla in doing that. But Tesla's ability to not only ramp, but have a willing consumer and great suppliers all in the same place makes this Shanghai factory just an enormous asset for them in driving not only EV innovation in Asia, but just the adoption of EV. But Tesla is not saturated in the United States by any means. I think they're production constrained in the United States until they build a new factory. So I think the reality is we're going to see a lot of growth in China in the EV market, not just with Tesla, but with Chinese EV players as well.
How much risk do you assign to the operations in China, given how dependent Tesla is and what's going on with US-China tensions, particularly as we know one of the things that Beijing could do is really to step up protectionism and push their own, made-in-China brands?
Well, look, China is a lot smarter than the U.S. government currently, and the bottom line is China has never acted in short-term manner. China is a long-term player in everything that it does, and there should be no conflict between the U.S. and China longer term. This is solely created by Trump. Trump's going to be gone in 3 months, and we're going to restart these negotiations from an actual place of making progress versus some sort of blackmail to try to get him reelected. So the Chinese have been very patient dealing with Trump for the last couple of years, and hopefully we'll be able to have a much more productive business environment moving forward. So I'm super bullish on the Biden administration making amends with the Chinese so that we can have a much more productive global trade environment. So I think
which is really interesting because a lot of people say that. Ross, let me get your view across the rest of the tech complex, because you're pretty bullish across most of these tech names, right? Even when it comes to Netflix, which, for most of the market was disappointing last week. But what do you like in particular? Is it the enterprise facing? Is it retail facing like Apple, or is it really both?
Well, no. What we like is the digital economy. What we're seeing now because of coronavirus is just mass adoption of the digital economy. So the more digital you are, for example, Microsoft and Netflix, the more profitable you are, and Microsoft just put up great numbers. And then the more reliant you are on retail sales and or ad revenue, the harder your business is going to be. So the Twitter and the Facebooks and Snapchats are actually kind of having to struggle to get ad money right now, even though they have a lot of user engagement. They make their money from the ads. But, Apple's somewhere in the middle. They have a great business digitally, and they have some great products that everybody needs in this era. But they also have a lot of retail sales that are going to be affected and global sales that are affected, and their products are expensive, and we're in a recession. So, we're I would say I'm neutral on Apple right now. We own all the stocks other than Twitter and Facebook. But I'm very bullish on technology. I'm very bullish on non-ad revenue technology.
Yeah, I do get your optimism there, but can investors really, new investors, get into tech stocks right now given the valuations?
Well, this is a tough market to get into right now. We're bearish on the markets. I'm bearish on the economy. So I would say that all investors need to be conservative. But for the stock portion of your portfolio, you want to own technology stocks because they're the ones making money. So you can find value, but many of those companies are in a lot of trouble, so maybe they aren't that cheap. You know what I'm saying? So I think you've got to go with the companies that have rising earnings, even if you're paying up for them. I think when we look back 5 years from now, these are still going to be the big winners out of coronavirus. And so whatever allocation you maintain in equities, and ours is incredibly conservative, it still should be in companies that have the greatest earnings growth.